Hey guys, how's it going? Solo back with yet another daily video. Let's get right into it. We're going to talk about DraftKings. We haven't looked at this stock in quite some time. Had a big move up today. Some recent news that came out. Let's get right into it. Look at the overall heat map for the market today. Much better than how we were looking yesterday. Yesterday we were deep red. Today we looked like big green, up 2-3%. Looks like across the board. Big tech was all green. Look at the semi-sector, all green, including AMD, Intel. Micron has earnings coming up on Thursday, up 4% today, so maybe a run up to earnings. Qualcomm up over 2.5%. Let's take a look at DraftKings. You know, this is Robinhood. Take a look at this, up over 6% today. We started off rough, right? We were down about 1.2% in pre-market trading right when the bell rang. And then we were just off to the races. Like I said, up over 6%, down a little bit as I'm making this video, about 0.5% after hours, but that's not too much. On the week, you're still not looking that great, down 1.6% on the week. And we'll talk about that with some news articles in just a minute. For the month, you're also not looking so hot, down 5% on the month. But if you're looking at the 3-month chart, still, you've gotten beaten down. Take a look at this, almost 23% on the past 3 months. And I think this is why I've kind of been avoiding this stock, because it was hot a few months ago, but has really cooled off. I mean, on the year though, you're still looking pretty good, up almost 340% on the year. Let's take a look at the option chain real quick to see exactly how juicy this stock is. So if you wanted to run the wheel strategy for options, take a look at this at the money for a weekly put. Now, of course, this is only now 3 more days to expiration, but just as a quick check, you would collect $103 in premium and you would have to put up $4,700 in collateral at the money. So that is going to be a return on risk of about 2%, 2.2% actually, which is not bad, because I think if we were to open this position 2 days ago or on Monday, this probably would have been closer to 3 or 4%, I would guess. So not the juiciest premium I've seen, but it's also not the worst. Let's take a look at the news articles that I saw recently about DraftKings stock to see, what does the news media think? Is it bullish or bearish right now? And is it going to go up? That's what everybody wants to know. So right off the bat, this is an article from the Motley Fool that actually came out on December 31st. So it's just a few days old, but the title of this article is the 3 best stocks to buy in 2021. So you already know where I'm going with this. Well, the first stock is Freshpet, which we're not going to cover in this video. The second stock is DraftKings, which is why I'm showing you this article. And then the third stock is actually SiriusXM Holdings for those that were curious. But if you look at this article, they're saying obviously that 2020 was a strange year for sports, obviously because the illness and leagues were being shut down. But they're saying that right now, DraftKings is the leader in fantasy sports wagering, and they're growing compared to the more traditional sportsbook gambling websites. And they actually saw the revenue climb by 42% in the last quarter, despite all the craziness that was going on with sports and being shut down and bubbles and stuff. So they're actually still bullish. And like I said, in fact, they're naming this one of the top 3 stocks for this year. Let me know if you agree or disagree. Let's take a look at the other 2 articles that I saw on DraftKings. So here's another article that's even a little bit older. It's from December 29th, but it's from Yahoo Finance, and it's titled DraftKings Dips More Than the Broader Market, What You Should Know. So what should we know? So right off the bat, they're saying that the gaming industry is part of the consumer discretionary sector, and that this industry has a Zacks industry rank of 127, which puts it in the top 50% of all over 250 industries. So already the DraftKings sector or their industry is already within the top half. So that's good news in general. And they're saying that these industries in the top 50% tend to outperform the bottom half by a factor of 2 to 1. So in general, just because DraftKings is in the top 50% industry, they're saying that it's likely that it's going to basically double the performance of the lower industry rankings. And here's the last article that I want to show you. This one just came out yesterday, and this is also from Yahoo Finance on behalf of Bloomberg, and it's titled DraftKings May Resume Slide as Share Lockup Expires Tuesday. So it seems like these articles have been relatively bearish, except for the one I just showed you about just the industry in general. The reason why they're bearish is because they're saying that the share lockup expires today, actually. And the reason why they're saying that is because 64 million shares held by mostly company insiders will be eligible for sale today. And that means that the number of shares available to trade will increase by more than 20%. And the interesting thing is, after their last lockup expiration, DraftKings dipped only 0.4% when about 37 million shares became available in November. So the shares also felt another just about 5% after another lockup ended in October. So overall, the past 2 times the lockups have expired, DraftKings did dip from about 0.4 to 4.6%. So today, I think the expectation was it'll be another red day, but quite the opposite happened. Like I showed you, we were actually up 6%. So maybe the company insiders that had the ability to sell their shares didn't want to because they see a brighter future ahead. So here's the Trade UI option sweeps platform that I use. We can see we're looking at DraftKings ticker here. We have 16 big orders or sweeps that came in today on DraftKings by the big money investors, the hedge funds, the institutions. If I scroll down to the bottom, you can see every green box represents call options that were bought. The red boxes represent put options. So right off the bat, you can see that there's more call options than put options. And if we take a look at the strike prices, DraftKings was trading around $45, $46, $47 today. Take a look at all these green boxes. They're 45, 65, 55, 70 strike call options that were bought. And these were for big money. I mean, the largest value is this one here, a $272,000 position for October at this $70 strike. So someone is betting big that DraftKings is essentially going to double in price by October. I mean, that's crazy. All these call options. So people were definitely bullish on DraftKings today. Let's take a look at the TradingView chart to do some updated technical analysis on DraftKings. So here's my TradingView chart on DraftKings. You can see we've been looking at this stock for quite some time. We have to do some more updated TA, delete some of this old TA that was on there. The first thing I want to do is update my Fibonacci retracement levels. If you're new to the channel, every candle represents 1 day of trading. The orange line is the 21-day moving average. The pink line is the 50-day moving average. I use volume bars at the bottom, and then underneath that is the RSI curve. And then these colored rows are the Fibonacci retracement. So let's re-edit this and make it so that it starts at the most recent low, which was kind of back on October 30th and November 2nd. And then we'll draw the top of the retracement to the most recent high, which was back right about here on December 18th intraday. So let's keep it like that. The yellow lines represent areas of support and resistance that I've identified. So let's see if we can find new areas of support and resistance. And right off the bat, I'm liking a line right here, right around $47.70. It's actually right where we close the day. But if we take a look, it's right at the 38.2% Fibonacci level. And it looks like it was support back in end of November for a few days. And then also again in early December. And even most recently on December 29th and 30th. So I'm really liking this right now. But this is going to act as resistance right now because you can see we topped out there. So I'm going to be looking to see, are we going to continue the green trend tomorrow and break above this area of resistance? Or are we going to bounce off it to the downside? The other thing is we're right on pretty much the 50-day moving average. So that's also going to act as support or resistance. It's going to be very interesting to see what happens tomorrow. Are we going to continue the green trend up and then our next area of resistance is about $49? Or are we going to bounce off this area of resistance and go down? Right now, my next area of support is around high $43. So there is quite a way that we may sell off depending on how it looks. Look at the RSI curve. We're kind of in the middle, not really overbought, not really oversold. Maybe we're a tad closer to the oversold side, but that doesn't really help us too much in my opinion. Let's see if we can do some more TA. I think I'm going to draw another area of resistance right around here, which also lines up with this area of Fibonacci retracement. And you can see we used that as resistance back on early December and even back in late November as well. So right now, I think our next areas of resistance, if we do continue the green trend up, are going to be around $49 and then up to $51. If not, I'm going to be looking to see how far down below we fall because my next area of support is around $43, $44. I don't really see a lot of price action between 43, 44 and where we are currently to form another area of support. Maybe this Fibonacci level at 50% is going to act as support because it looks like there was one candle on November 13th that topped out there, and then also another candle on October 16th that topped out there. But really, there's only two kind of price points there, or data points. So I'm going to leave that as iffy, but I will draw it on the chart. Maybe we'll sell off and hold around $45. That's really where I'm going to leave this right now. The one thing I don't like is that we are in a downward trend, right? The overall trend right now is something along the lines of this if I just draw it relatively quickly. So I need something to show me that we're going to break out of this downward trend and go back up and to the right. Let me know if you agree or disagree. As always, make sure you join our Discord server. We have some new free text channels and voice channels. Follow me on Twitter, follow me on Instagram, follow me on Reddit. And most importantly, I hope you have a green trading day tomorrow and happy trading.